If you've spent any time watching investing presentations online, chances are you've come across Dylan Jovine. He's known for bold predictions, big numbers, and dramatic stock pitches that claim certain companies could make you wildly wealthy, sometimes even more than Microsoft's historic 150,000% run. Well, he's back at it again, this time talking about what he calls a $24 trillion opportunity tied to something he calls A. His teaser hints at a robotics defense company flying under Wall Street's radar, and claims this one stock could help investors cash in on a military tech boom sparked by the rise of artificial intelligence and advanced robotics. In this breakdown, we're going to dive deep into that presentation, dissect every clue, figure out what stock he's actually talking about, and then give a full analysis. We'll also take a critical look at Jovine's track record, explore the broader defense sector, and discuss whether this stock, and others like it, actually deserve a spot in your portfolio. Let's get started. Jovine's track record, how good is he, really? Before trusting anyone's stock pick, it's important to ask, do they have a good track record? Dylan Jovine has recommended a mix of companies over the past couple years. Some of them worked out really well. Others? Not so much. Let's start with the losers. Jovine previously recommended a biotech stock called KTOS. Unfortunately, that one hasn't performed as expected. Biotech stocks can be notoriously volatile and speculative, so it's not too surprising, but it's still a miss. However, he also recommended Palantir Technologies in August 2023. That call turned out great. The stock had been trading in a consolidation range for months, and right after he made his pitch, it broke out and soared. That was a solid pick. In early 2024, Jovine put out a list of defense stock recommendations. He named 4 companies in total. Let's run through them. The first was a lesser-known defense firm that's up significantly since the pick. The second? Once again, Palantir. He went back to a previous winner, and the timing was solid. The third was Elbit Systems, a defense electronics and aerospace firm. This one has seen strong price performance since January. The fourth was AeroVironment. That stock has done very well too, it's roughly doubled. Then in May 2024, Jovine shifted gears and recommended 2 space stocks. The first was BigBear.ai, a high-risk, high-reward AI data analytics firm focused on defense and intelligence applications. Since his pick, that stock has skyrocketed. The second was ARM Holdings, the British semiconductor firm that went public again after being acquired by SoftBank. ARM has also posted strong gains in that time frame. Bottom line, over the past year or so, Dylan Jovine has had a pretty strong run, especially with defense and tech-adjacent names. Diving into the pitch, what is A? Let's now dig into Jovine's new pitch. The headline of his presentation reads, A will unlock a brief $24 trillion wealth opportunity. Naturally, this got people curious. At first glance, A sounds like some cutting-edge new technology. Is it some kind of AI upgrade? A secret Pentagon program? A tech breakthrough only insiders know about? Turns out, it's none of those. After some build-up, Jovine finally reveals that A stands for Embodied Intelligence, a fancy way of saying robotics powered by AI. So what he's really talking about here is the next generation of autonomous robots, machines that can learn, adapt, move, and function in the physical world using AI. He spends a lot of time hyping up how fast robotics is evolving. He gives examples of humanoid robots that can cook, act in plays, and even mimic the movements of basketball legends like Kobe Bryant just by watching YouTube videos. According to Jovine, the next wave of robotics will be trained in virtual simulations, what he calls simulated realities, and will learn motor functions as quickly as they learn speech or strategy. He makes a big claim here, that these machines will not only be smarter than humans, but soon, just as agile too. He paints a near future where advanced robots walk among us, and more importantly, take center stage on the modern battlefield. Why defense? So, why is he zeroing in on military robotics? Jovine makes a few compelling points here. First, he argues that global defense budgets are exploding, and not just in the US. Nations like China, Russia, the UK, Saudi Arabia, and others are aggressively investing in next-gen military capabilities. The world is getting more dangerous, and governments are responding by opening their wallets. He mentions that the US recently passed a $1 trillion defense budget. Whether or not the exact number is accurate, there's no denying that military spending is on the rise. Second, Jovine argues that traditional weapon systems, like tanks, aircraft carriers, and manned fighter jets, are becoming outdated. He points out that a $500 drone recently destroyed a US Abrams tank. And he's right to highlight the changing nature of warfare. Drones, cyber weapons, autonomous systems, and AI-driven decision-making are becoming essential. Third, he says the real opportunity isn't in the big names like Lockheed Martin or Raytheon. Instead, he believes that smaller, more agile defense companies developing autonomous tech and AI-powered drones will benefit the most. And that brings us to his number one pick. Clues pointing to Kratos Defense. Based on all the details in the presentation, it's clear he's talking about Kratos Defense and Security Solutions, KTOS. Why do we think this is the company he's teasing? Let's look at the clues. He says the company has contracts with Lockheed Martin, Boeing, and Northrop Grumman. He mentions robotic warfare, combat drones, and AI-powered systems. He hints the stock is under the radar and not widely covered by Wall Street. He's pitched Kratos before, and he has a pattern of reusing past recommendations in new presentations. All signs point to Kratos. So let's take a deeper look. Who is Kratos Defense and Security Solutions? Kratos is a mid-sized US defense contractor headquartered in San Diego, California. The company focuses on next-generation military technologies, particularly unmanned systems, satellite infrastructure, cybersecurity, and training simulations. The company is much smaller than giants like Lockheed Martin or Raytheon. Its current market cap, as of mid-2025, is around $2.7 billion. But don't let its size fool you. Kratos is doing some really advanced work. What does Kratos actually build? Kratos has three main business segments. Unmanned systems, this includes tactical drones and autonomous aircraft, most notably the XQ-58A Valkyrie, a low-cost, high-performance drone designed to fly alongside fighter jets in combat. Space, satellite, and cyber, this segment offers secure communications infrastructure, satellite ground stations, and cyber defense tools for both government and commercial clients. Training and simulation, Kratos develops realistic, high-tech military training environments to help prepare troops for complex battlefield conditions. Key products and projects. XQ-58A Valkyrie, perhaps Kratos' most famous project, the Valkyrie is part of the Air Force's push toward loyal wingman drone systems. These drones are meant to fly alongside piloted jets, carrying weapons and supporting missions while keeping human pilots out of harm's way. Mako and Banshee target drones, these simulate enemy aircraft and missiles for military training. Satellite ground systems, used by NASA, the US Air Force, and commercial space firms to communicate with satellites. Directed energy weapons, including research into laser and microwave-based systems that can disable enemy drones or electronics. Electronic warfare, Kratos builds tech to jam enemy radar, spoof signals, and protect US forces from detection. Financial snapshot, as of 2025, revenue, $1.12 billion, up 10% year-over-year. EBITDA, $111 million. R&D spending, over $134 million, about 12% of total revenue. Profitability, margins are improving, but still thin compared to legacy defense firms. Kratos prioritizes long-term innovation over short-term profits. They're reinvesting heavily into R&D to stay ahead in emerging technologies. That strategy has trade-offs. It limits current earnings, but helps them stay competitive in the long run. Strategic partnerships. Kratos has strong working relationships with major defense primes and agencies, including Lockheed Martin, Joint Drone Development, Boeing, System Integration Projects, Northrop Grumman, Defense Weapons and Software Collaborations, NASA, Satellite and Communications Infrastructure. US Air Force and Navy, autonomous drones, cyber tools, and electronic warfare tech. These partnerships are key because they open the door to big-ticket government contracts, and Kratos has landed several multi-year, multi-million-dollar deals in recent years. Competitive advantages. Kratos has a few clear strengths. Speed and agility. Being smaller allows Kratos to develop and deploy tech faster than large, slow-moving defense contractors. Focus on disruption. Instead of maintaining old legacy systems, they're building the tools for tomorrow's wars: AI drones, cyber weapons, and robotic systems. Intellectual property. Kratos owns a growing number of patents, and they're involved in several classified programs that competitors can't access. First mover advantage. They've carved out an early lead in loyal wingman drone systems, making them a top player in that space. Risks and red flags. That said, no company is perfect. Kratos comes with some real risks. Dependence on US government contracts. Most of Kratos' revenue comes from federal defense spending. Any changes in administration, budget priorities, or delays in procurement can hit the company hard. Low profit margins. Despite growing revenue, Kratos is still not massively profitable. They're banking on future earnings and scale. Execution risk. Developing new tech is risky. Projects can run over budget, hit technical snags, or fail to get approved. Volatility. The stock price reacts sharply to news and policy headlines. It's not for the faint of heart. Is it a good investment right now? Kratos has nearly doubled since late 2024. If you got in early, congrats. But from here, it's a tougher call. The company still has room to grow, but the valuation is starting to feel stretched relative to its earnings. It's not overpriced, but it's no longer cheap. If you're buying now, you need to believe in the long-term story and be ready to ride out the bumps. If you already own shares, this might be a good time to hold and let the growth play out. If you're new, you might want to wait for a pullback before jumping in. Final thoughts on the defense sector. Regardless of whether you buy Kratos or not, it's clear the defense industry is changing fast. Drones, robotics, and AI will play a bigger role in the next decade of global security. Countries aren't just increasing budgets, they're completely rethinking how warfare works. Instead of bigger bombs or faster jets, they want smarter weapons, cheaper platforms, and autonomous decision-making. That's where companies like Kratos shine. But there are others in the space worth looking into too, companies working on AI command systems, satellite imaging, cyber warfare, and smart missile defense. The opportunities are broad, and picking the right players early could pay off in a big way. Summary. Dylan Jovine's teaser is almost certainly about Kratos Defense. The company is a legitimate player in defense robotics, AI drones, and military simulations. Strong revenue growth, big R&D spending, and top-tier contracts support its long-term story. Valuation is a bit rich today, but the long-term growth potential remains strong, best suited for long-term investors who can handle some volatility. That wraps up this deep dive. Let me know if you'd like a breakdown of other defense stocks or a side-by-side comparison of Kratos versus similar high-tech defense contractors. Thanks for watching. Make sure you subscribe our channel.